A detailed thread just dropped claiming Ripple has been in closed-door talks with major players since the Project UBIN era, testing how identity, settlement, and banking all fit together. It's raising real questions about who's involved and how close this is to going live now that it's been in production for years. And likely what set it back was this whole SEC lawsuit. But what's super interesting is we have an account titled The Wrath of Kahneman who consistently shares verifiable XRP information and data, and even he's saying he's not 100% sure if this is legit, but it seems interesting. So we'll be diving into that, and I'll show you the key parts without all the noise so you can understand what this means moving forward and how it's going to affect XRP. Either way, on the record, the institutional build is already visible through BDAX, which signed on to use Ripple custody and institutional XRP custody in South Korea, which has now gone live. That's regulated storage and access, which is exactly what big clients need before they move any kind of size. It all comes down to compliance, which Ripple has worked very hard to get the right licenses and to achieve. Now, recently, Grayscale had an ETF approved that's a basket of all sorts of cryptos that include XRP. And what makes this news extremely interesting is that the wider market is tilting risk on now that we're going to have regulatory clarity, which we will cover. Grayscale just moved to stake 40,000 of their Ethereum. In other words, the writing is on the wall, and this is likely going to occur with something like XRP as well. And what's so beautiful about staked cryptocurrency is that 9 times out of 10, it is yield bearing. It's used as collateral to borrow against. But one thing you don't do with staked crypto is sell it. So as demand continues to grow at an institutional level, there will be less supply available, creating a supply crunch, which could drive the price of XRP to new all-time highs. While at the same time, the backdrop is quite strong over in DC, as Brian Armstrong, one of the most powerful men in crypto, the Coinbase CEO, says he's seeing real progress. Virtually most policymakers are now on board, and there is going to be a lot of upside for all sorts of crypto products. And here's where things get really exciting. This is the perfect storm because we are on the brink of the biggest cycle. Global M2 is growing. Stocks are hitting all-time highs. Gold is at an all-time high, and Bitcoin is lagging slightly, but once that hits an all-time high, many major cryptos are going to follow and arguably outperform Bitcoin because that is their personality. 9 times out of 10, smaller cryptos that are strong cryptos, something like XRP, tend to outperform major cryptos like Bitcoin into extremely bullish scenarios where now the Fed is going to continue to cut rates, or at least is expected to. So if that mood sticks, flows are going to spread into crypto. And in this video, I'll be covering everything we just talked about and give you my key play-by-play with levels that I'm looking out for, pivot points, and what this could mean for XRP if institutions really start driving trillions of dollars into crypto markets through things like tokenized treasuries. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners YouTube channel. If you're new here, my name is Paul, and you can find me on Twitter or X at PauliDeFi, PauliDeFi. And we've been covering this over the last few days, and I don't want to spend too much time on it, but this is extremely bullish for crypto markets. And like I've said over and over and over again, all dips right now are for buying. And it's one thing where you see the stock market consistently hitting new all-time highs, while it may feel like there's a negative macroeconomic backdrop, which we've covered surrounding the Fed rate cut, which is technically a negative signal. However, it's very positive for borrowing. But the only reason the Fed lowers interest rates is because we are seeing a slowing or a worsening job market, which is an indicator of a weaker economy. Either way, it's important to remember that markets can remain irrational longer than you can remain solvent. So selling right now just because we're at an all-time high doesn't mean that markets can't continue to climb through new all-time highs into the end of the year and continuing rallying for what seemed like some impossible gains. We have to remember that markets and participants are far more greedy than anyone would ever expect. Now, that said, the Wall Street Journal did report that not only today, and I'll show you right here on the S&P, we hit a new all-time high yet again, but that President Trump announced a TikTok deal with Chinese leader Xi Jinping after the two spoke today. Now, they didn't release the details of the deal, but new investors would own about half of the company, bringing in more income revenue industry to the United States. And that's alongside the fact that the US government now owns a major portion of Intel, which recently skyrocketed because Nvidia invested another $5 billion into that deal. So again, when we have a macro backdrop that is as strong as we are right now, a lot of this capital will find its way into even riskier asset classes like crypto. Now, the reason they're considered riskier is not because you and I think they're extremely risky, although many cryptos that aren't in the top 20 or 100 by market cap are. It's simply that fund managers and asset managers actually weigh their portfolios based on volatility and potential drawdown or risk by buying and holding these cryptos on their balance sheet. So yes, crypto is considered risky for the majority of big players in the market, which is why it's so important that when they invest in cryptos or crypto companies, that these companies actually service real industries and have real utility, and that their blockchain can not only be utilized in a compliant manner, but will actually drive revenues. That's a big one, right? When you think about the stock market, people invest in companies because ultimately they think that that company has a moat, that they're going to service a client or a customer, that they provide a product or service, and they have room to grow. Well, that's the same with cryptos. Not everything is designed to look and be like Bitcoin, which is just a digital store of value. And so two of the coolest pieces of news right now is the fact that right now, US Treasuries are getting tokenized on the XRPL, which is a $27 trillion market. Now, obviously, not all $27 trillion is going to flow directly into the XRPL, but because it's such a large market, even just a portion or a fraction of this market entering into the XRPL will create demand for the XRP token, which is the underlying token that that entire ecosystem runs on. And to double verify it, we have RWA.XYZ, which is called Real World Assets, and is a site essentially run by a conglomerate of all of the biggest and best real world asset chains in the crypto market. So when you click on this source, you can see that there's currently $356 million already tokenized on the XRPL, which is going to continue to grow. It's already up 10% over the last 30 days. And the majority of this is in the stablecoin market with 265 million. Now, what's so beautiful about a business model like Ripple with their XRP token is the fact that they actually service a wide array of applications and all sorts of businesses in different manners. For example, in this case, BDAX Korea is one of the only 4 licensed crypto custodians in South Korea who is now delivering secure institutional access to XRP, RLUSD, and other tokenized assets with Ripple custody. And as the entire global financial system begins to modernize, Ripple is yet again ahead of the curve, where BDAX is going to leverage Ripple custody in order to support tokenized real world assets. And yes, trillions of dollars will move on chain. It really just comes to a first mover advantage. And so these are the very first people in South Korea to enable institutions to transact and hold any XRPL native asset. So let's go ahead and check this video out that they just shared.
Digital assets are global. It moves 24 hours a day, 7 days a week. Given the speed at which the industry was moving, it was necessary to start using a regulated infrastructure. To be able to work with Ripple is going to be a key competitive edge for BDAX. Hi, my name is Terry Kim. I am the co-founder and chief strategy officer at BDAX. BDAX is a fully regulated digital asset custodian based in South Korea. We provide a range of services, including custody, asset tokenization, and support for stablecoins that enable institutional clients to execute on their digital asset strategies in Korea and regionally. Partnering with Ripple allows us to bring that regulatory compliant mindset and the technology for our institutional clients so that they can have peace of mind when they're working with BDAX, that they're leveraging a robust, battle-tested solution to be able to expand on their digital asset business. In 2017, when I was a partner at a global law firm in Korea, the only infrastructure available was centralized exchanges. It was very obvious to me that the entire digital asset space was going to be institutionalized, and I realized custodians were playing that key infrastructure role. I started BDAX. One of the custodians partnered with a tier 1 national bank. And in order for institutions to come in, it's important to have regulatory compliant infrastructure. With Ripple, we're able to provide support for RLUSD in Korea in ways that was never possible. In terms of asset tokenization, we're able to work with banks and security firms in Korea. We're able to launch tokenized products. We're able to provide custody to support institutions and execute on their digital asset strategy. Over the past 10 years, only retail clients had access to digital assets. BDAX is at the center of this transformative landscape to providing the best-in-class user experience as institutions are being first introduced to digital assets in Korea.
Months ago with the Genius Act,
So as BDAX works to onboard institutional players into digital assets, Brian Armstrong is doing the same. We already have stablecoin legislation, but the next step is clarity and regulation around cryptos that are not stablecoins. And he said they're making a lot of progress in DC and won't let big banks ban crypto rewards. So now we're talking about lending, staking, and all sorts of other DeFi activities when it comes to this market structure bill. Let's have a listen to what he shared recently in Washington.
I'm here in Washington, D.C. again, fighting for your rights to try to get some market structure legislation passed for crypto. This would be foundational, just like we did for stablecoins a few months ago with the Genius Act. Market structure legislation protects all the other non-stablecoin crypto assets like Bitcoin and Ethereum. The Senate is strongly supportive of getting this done. The members that I met with on both sides of the aisle are ready to get this legislation passed, and there's draft text now being exchanged back and forth and with the industry for comment, which is great. We saw a lot of alignment today. Now, of course, this hasn't stopped the big banks from trying to throw a wrench into things, and they're trying to ban rewards on stablecoins. The members of the Senate who I spoke to, they're not going to let that happen. That was already litigated and decided in the Genius Act for stablecoins. They're not going to bring it up again. But barring these little details here and there, I think this thing has a good chance of getting done. I've actually never been more bullish on a market structure getting passed. It's a freight train leaving the station. So we're going to keep showing up and fighting for your rights. You can do a lot to help by going to standwithcrypto.org and contacting your representatives. Let them know that you want to see market structure legislation passed for crypto. Thanks.
So if and when this thing passes, it's going to open up the doors for a lot of those institutional players who've been sitting on the sidelines, still a bit uncertain on whether or not they should actually buy and hold crypto on their balance sheet or for their clients, and could provide the necessary rocket fuel for cryptos to pump to new all-time highs. Now I want to dive into this post from Lord Belgrave, which talks about Project UBIN, which is quite interesting. And although it is not verified, Ratha Kahneman did say it was fascinating, and this is someone that I tend to listen to because he really double verifies anything that he shares. And if it's not verified, he still mentions this account posted it and said it's a thesis, not a certainty. Still, it is quite interesting, and so we're going to dive into it and simplify what he shares. So in 2015 to 2017, this gentleman says that he witnessed behind closed doors how Ripple and XRP were quietly referenced in technical materials in Singapore, which launched Project UBIN. At the time, it was just an experiment. And again, these were early days because in 2012 to 2014, XRP was really new. Now, Project UBIN's mandate was a collaborative project with the industry to explore the use of blockchain and DLT, or distributed ledger technology, for clearing and settlement. Something that we already know blockchains are very well capable of. It really just comes down to who's doing doing the settlement and how compliant are they? We now are getting to a point where not only do we have stablecoin legislation, but we have companies like Ripple registered in New York, and they also have the ability to be custodians. We just saw that with BDAX. So these were the early days when no one really knew it would work. They just knew that if it did, this would revolutionize everything. They were already running pilots testing tokenized asset settlement, fast cross-border messaging, and finality using DLT. Now, when we talk about time to finality, that's the moment you press send on a transaction when it is finalized on the other end. Old financial systems sometimes take minutes, sometimes days, and it's very inconsistent depending on congestion. Well, with crypto, there's near instant settlement. Now, Belgrave shares his experience reviewing these prototypes at his bank when it came to liquidity savings, atomic netting, settlement obligations, consensus ledgers, and found that a lot of this was very similar to Ripple pilots. Even Ravi Menon's speech, the MAS governor behind UBIN, said that Project UBIN demonstrated that banks could pay one another without going through mass using a blockchain-based digital representation of the Singapore dollar. Now, one thing we have to remember about Singapore is that they're kind of ahead of the curve when it comes to a relatively newer nation who incentivizes global business by less taxes and less regulation. And that Ripple pilots did exactly that in lesser known corridors. But here's where it's all going to start to make sense. If you remember, recently we covered on this channel that Ripple is partnering with DBS Bank. This was actually posted very recently on September 17th of this year. And we have to think about the timeline, right? Ripple gets sued by the SEC in 2020. They could have been testing loads of things with all sorts of partnerships and banks from 2015 to 2017. However, things were not ready to roll out. We had no regulation. Ripple is then sued, and finally things are starting to settle down this year where they no longer have that case sitting on their burner. And so they partner with DBS Bank. Look at this. DBS's Future of Payments Insights shows the lineage. DBS public reports say UBIN was the launch pad for Partier, a payments and security settlement network exploring multi-asset class use cases. And what's interesting is Belgrave shares that this is exactly what he saw, and it aligns perfectly inside of the NDAs that he was privy to. The fact that XRP was used as a bridge or a settlement asset in tokenized commodity or securities settlement under regulatory guardrails. And that his thesis is that Project UBIN was not just testing distributed ledger technology, it was a front door for experimenting with exactly the architecture Ripple and XRP had been building, which is atomic settlement, liquidity bridges, tokenization, and identity or settlement finality. Now, UBIN did not name XRP in their public materials because the technical overlap and private briefings suggest ISPs, DBS, and Ripple Labs were coordinating under an NDA. Now, we already know that DBS is integrating Ripple and the XRPL into their business model, but where this matters is the fact that now it's going to truly speed up adoption in Southeast Asia. That regulators will have everything they need in order to let the XRPL run settlement and tokenized securities, and that these experiments will set precedents that Ripple can rely on for future regulatory legitimacy. So to make a long story short, if true, and this recent announcement with Ripple and DBS gives us a higher likelihood of this being true, then the XRPL will explode through Southeast Asia and now South Korea, and we have all sorts of partnerships in Japan. The last piece to this whole puzzle is going to be market structure in the United States, which looks very good right now. But either way, the XRPL is going to continue to have real world asset tokenization on chain, which will continue to drive the price of XRP to new all-time highs. So why are we just chilling in this range? Well, I would argue it's because Bitcoin recently sold off. So you can look at the majority of the crypto market, right? They trade highly correlated, but I still want to see Ripple or XRP hold that $3 range, and I do not want to see it break below $2.94, because if it does, it's very much possible that we come in for a new local low of potentially $2.88 before beginning our new major trend up, and that would be a 618 retrace on the fib scale. Some key levels I'm watching closely is going to be having us break back above $3.12, a break above here. And again, sometimes things take longer than you expect, right? You see, we're seeing resistance once, twice, 3 times, and now 4 times. A break above 312 will likely take us up to that prior range high of 336, and I'll be covering it directly on this channel. So today provides another opportunity to buy a dip, considering this is still a technical long-term uptrend, even though we're experiencing an intermediate term downtrend. And I do expect new all-time highs by year end. And that's it for the video, folks. If you enjoyed it, be sure to subscribe to the channel. Thanks so much for watching. And also check out altcoinpro.com, or if you have any questions whatsoever, whether it's to join our Discord, whether it's to get a crypto loan, whether it's about Altcoin Pro University or any of the other offerings that we do have a link to the Telegram bot down in the bio or the pinned comment below, where you can get answers to any and all of your questions. Thanks so much for hanging out with me, my friend, and I will see you in the next video. Goodbye.